All right, good morning, everyone. This is Lou Sportslino, ManovaMarket.com, and well, I guess I got my wish. We got some volatility back in the market, and actually gives me a lot to think about today. So you got to think about where we've been, where we going, how we're going to get there, and different things. I got an email last night from somebody asking me how I determined where I put my stops and so on. And I'm not going to give you some generic dumb answer that everybody gives you. You got to have a 3-to-1 ratio. You have to only lose $1 for every $3 you make because it's what I've found out over the last 30 years. A lot of what has to do with trading and where you put your stops and how you determine where you're going to be at determines how you've been trading over the last 5 days, 14 days, 30 days, and so on. Because what happens is if you have a couple of drawdowns and so on, now you start looking at the money and you want to build your account back up and so on. But I mean, it's not you can't just disregard what your risk reward is going to be. I mean, definitely you have to look at your risk reward. That's like with anything in life, right? But you have to take a look of at where the market's been, where it's going, some probabilities of where you think it's going, and do some good homework and do your own work, and then kind of bounce off what you're thinking and what we're saying. So and other people. I mean, we don't have a panacea. We just have a process that we've developed. So I'm going to start out with a day chart, right? And basically today we've had a high of 1999 and a half. We've had a low of 1988.75. We still haven't taken this low out here, 1987 half. Remember, this is where this rally started from, 1986, basically 1986 and a quarter right here. This is that breakout area. So we're still above that area, but I've drawn this little channel. Here's the high from yesterday, okay? And here's this channel. I've drawn this channel because I think anything below this down to here is fair game. So from 1986 and a quarter back to 1967 is fair game. And we have some lows here at 82 and 81 half. And my partner Pat put it in the market update today, so you can get that on the website. All right, now a couple things that have jumped out at me. Let me go to the day chart, but a couple things that have jumped out yesterday on that whole rally. Okay, when you take a look at several different things. Okay. One, let's take a look at, here's value, right? 1995. Now we've just had a big rally off the lows. We rallied up, got in through value, okay? Got in through value, and we came back out of it. All right, so that's the first thing we've got to look at. The other thing I want to look at is this. The top of value is 208 and a half. And the point of control is up there at 208.75. So that's saying that yesterday's volume, even with the big down day, that most of the volume was done up on the top. That's suspect to me. It's very suspect that there was more volume still sitting up there on the top. Okay, so that means that the volume on that rally, on the break yesterday, was more to do with people selling the market and the buyers not defending it. Okay, so. And remember, we talked about poor bottoms, poor bottom. Well, we got a poor top now. Let me put this over here for you. All right. So when we take a look at yesterday's top, had no tail right there. Had no tail. So this is market profile, right? So we got a poor top. That doesn't mean that I think it's going to go out and take that out today. All right. It's Friday and whatever. So the question I was asked yesterday was, how do I do, when I ascertain when I'm going to have a risk reward on a trade, right? All right. So I'm looking at this chart right now, and I don't want to go too long on this opening market. And I'm saying right now, I've got this big body right here, this big body on this rally, right? That went up to here and down to here. I'm taking a look at this area right in here. These are all kind of connected, right? They're all kind of connected. So I'm looking here saying anything under this 1995, if we stay under it, is going to be suspect for me in thinking that this thing could retrace all the way down. All right. We stay above this 95 and get into value, then I'm looking for the market to basically retrace back up this way. All right. So up. So what do we have here? Up above, we have our 30-minute pivot at 2000. We have our 60-minute pivot at 2001 half. Okay. So Ed, I think, is the gentleman who sent me to stop, right? So if I was going to get long in here, if I was going to get long in here, now we have our we have our 5-minute pivot down at 1989, basically 1989. I mean, that's a 5-point stop if you got long here. That's a 6-point stop. Okay, so what I'm telling you is that I just gave you these parameters. This channel in here, all right. The more we stay above it, I'm leaning towards the fact that I think we can go up on the upside. Okay, and then remember now this area we've rejected. 2004 has rejected the market. Okay, and I think 2000 is an attractor. So this may be one of these trades where we get into value today and we stay in value all day, and we don't get out of either end because of the extremes. We have a bull bear zone here in 1997. So you can basically see that we went up, we touched through it, and we came back down through it. And now the market's going to sit in between here. So my point is, if we start building here, right? If I was getting long in this area, I'd be watching this area for stopping myself out. Anything in here, especially now we put the body of this low right in here. What is it? 1992.75. It's going to be one of those days. It looks like there's some news that's has driven the market. So a lot of volatility. I would trade with my short stops, and so that's sort of how I determine, And then there's other things. I mean, I need to do a video with all the tools that we use, and then we use the market profile, and that market profile we got a chart called F5. Go to the market profile, inside edge market profile, and see the F5 chart, which is looking at order flow and where the buyers and sellers are coming in. All right, a little longer than I expected this morning. Good luck, good trading. Stay with the updates today, guys. If it slows up, I'll probably be gone out of here by 1:30, 2 o'clock today, and Pat will be updating. I'll be at the University of Wisconsin. Go Leathernecks. We got a big, big, big job in front of us. Everyone's predicting 35-7, 52-7. So anyway, I love it, and I like to get this volatility back. Good luck, and I'll talk to you guys later. Bye.